kicking off with Anthony Trenchev from Nexo. Starting right now. Take it away, Anthony.
All right. Well, thank you so much for this very kind intro. Uh, Before we kick this thing off, I just want to get something out of the way. This will not be about Nexo's dividend. I had a lot of questions waiting in the green room about that. We'll do a separate announcement with regards to that. And the reason is we are a financial entity, and everything that has to do with the financial markets and includes financial data has to reach all people all at once. So with that out of the way, let's get into the presentation. And the topic for today is Bitcoin really not an asset? And as you can probably imagine, this goes back to this presentation that we saw coming from Lehman Brothers. Lehman Brothers, my God, what a Freudian slip here, which came out of Goldman Sachs and their department, which put into question the very fabric, so to speak, of Bitcoin. And this is what we're going to discuss today. And obviously, this audience and all of us don't necessarily agree that Bitcoin is not an asset. But then again, Goldman Sachs is the largest incubator of policymakers, and that affects us all for better or worse. And it's also important to consider that historically they have had reasons to make certain statements with regards to the markets, which have something to do with their positioning. So before we dive into the deep, just a quick note with regards to myself and Nexo, the company that I am a co-founder and managing partner of. So my name is Anthony Trenchev, managing partner and co-founder, as I said. And what is Nexo? Well, essentially, Nexo is a provider of banking services for the blockchain space. And we have been around for more than 2 years now. We are the first provider of instant crypto credit lines. Right now, we have more than 700,000 registered users. Okay, I'm being told that something looks different than what we had during the run-through. I don't know what's happening though. Sharing full screen. Okay. Is it better now? Okay. Hopefully it is better now. So yeah, as I was saying, we got about 700,000 registered users. We provide our services in more than 200 jurisdictions, which have resulted in more than 2 billion in transactions. So we do have some insights to share with regards to the traditional financial markets, and more importantly, with bridging the gap between that and the crypto blockchain space. So what did Goldman say? They issued a report sharing their outlook on various aspects of the financial markets, and they mentioned Bitcoin and gold, interestingly enough. Now, what was their thesis? You probably have seen it. It goes a little something like this. They don't believe that Bitcoin is an asset class on its own because it doesn't generate cash flow like bonds, for instance. It doesn't generate any earnings exposures. It doesn't provide any meaningful diversification. It's got historical volatility, which they deem high. And they even make the case that it is not a hedge against inflation. Now, before dismantling that piece by piece, I'm going to tell you something that not a lot of people know with regards to the banks in the US and their stance to crypto. But me being part of Nexo, and we have had meetings with the leading banks in the US, and I can tell you that it is for 3 major reasons. They can't still figure out what the Fed thinks about crypto, and that is a certain fear factor to them. They don't want to step on the wrong foot here with regards to crypto. They have, it's not like a startup, a bank like Goldman or Citibank. They have to run legal and compliance, and that amounts to tens of millions of costs. So that is a burden with regards to onboarding clients and issuing services, providing clients with services that would um, allow them exposure to Bitcoin. And last but not least, it comes down to pricing and custody. They don't know what to do with Bitcoin. Do they store it on their ledger, put it somewhere? How do they store the private keys? How do they do the market-to-market pricing? So these are all burdens that they have told us about in meetings that we had last year in New York. Now, first off, what's a financial asset? The definition is that it has to be a liquid asset which derives its value from a contractual right or an ownership claim. I think it's fair to say that Bitcoin fits both of these criteria here. Obviously, cash, stocks, bonds, mutual funds, and bank deposits, more importantly, are deemed financial assets. Now, their value is reflected by the supply and demand. So, looking at what is happening in the world right now, we could very easily make the case that true supply and demand principle is only viable and something that you can experience in cryptocurrencies and BTC, because these are the only free markets right now. And, I don't know where Goldman got their idea that it's not a financial asset, or it's not even an asset, but the IRS, Uncle Sam, is very, very clear about what Bitcoin is, and they have allocated this on the IRS return forms. It's quite clearly a virtual currency. Now, currencies are obviously assets, and there are even safe haven ones, such as the Swiss franc and the Japanese yen. So if you have Goldman recommending investments in vintage cars and fine art and whatnot, why would they deem BTC not to be an investment class asset at all? Now, the argument that they're making is that it doesn't generate a cash flow like bonds. That's a curious case here. How do bonds work? Essentially, you give your money to a country or a corporation in the hope that you see that money back, plus some interest. Now, due to the central bank's intervenistic policies, the yields are not particularly great, as you can see from the chart that I brought you. You have to, on the 10-year yield, meaning to hold it to maturity, you have to hold the bond for 10 years, you get the staggering 0.65%. Now, that still is better than something like bank deposits of Deutsche Bank, which would yield the staggering 0.05%. So you have to increase the risk you're taking and going into high yield bonds, and high yield bonds is a euphemism for shittier companies. So you want to get anything to just hedge the 2% programmed inflation rate, and with what's been happening in the world this past few months, I can promise you is going to be much higher than 2%. The inflation coming up, you have to take on a pile of risk just to maintain the position you were in a year ago because of inflation. Now, where does Nexo come in? And companies like this, we have an earn product, which allows you to earn up to 8% per year on your stable coins and fiat currencies, which is great. I mean, like in bonds, you would get on the 30-year yield 1.4%. And with us, a regulated financial institution, which has been around for what in blockchain space is essentially eternity, more than 2 years now, you would get something as high as 8%. With the launch of earn interest on crypto, where you could actually earn interest on your crypto assets, such as Bitcoin, it will, under circumstances and specific guidelines, it could go all the way up to 10%, which is something that we haven't seen probably since the 80s in anything bond related. Now, the other argument goes into the direction that Bitcoin and cryptocurrency does not give you exposure to the global economic growth situation. And this is truly a staggering and really confusing statement to be made, because we have to look at what the economy is looking like today and even consider, do we want to have exposure to the realities of the post-COVID-19 world? The truth to the matter is we're headed towards perhaps the worst recession that we saw in the since the 1930s. And you can see that by the chart. Another chart that I brought you from the Bloomberg terminal is the unemployment rate versus the performance of the S&P 500. You can see a massive disconnect here. We have unemployment at an all-time high, at least nothing that we've seen since the 1930s. And the truth to the matter is that all asset classes, be that bonds, stocks, commodities, even the real estate, they performed terribly for the entire decade during the Depression. You know, you would think that being in gold puts you in a safe space. It doesn't, because they outlawed it in places like Germany and the US. So you could not even hedge yourself, and inflation-like situation where inflation is coming, you can't buy gold because it was prohibited by law. You'll think that real estate, a hard asset which is finite, etc., would perform and outperform significantly. It didn't, because they put on duties, taxes, all sorts of levies on real estate owners, which prohibited them from even maintaining the purchasing power via real estate. So we have the unemployment rate at an extreme, and we have a sort of a paradigm shift, to borrow that term from Ray Dalio, really like that. It's because the past few years, when we saw this rapid bull run in just about any asset class that Goldman would perhaps recommend that you invest in, they were very heavily, the unicorns of the past decade being a function of unsustainable models. Yes, we love using Uber; it's great, but do we really think about the model that is behind it? The fact that they're subsidizing the drivers so that you get the efficient, clean, and nice ride that you do. Obviously, this works very well until you can tap into newer and newer VC money. It doesn't quite work that way when you are in a recession-like environment. So with that in mind, we built Nexo from the onset for it to make perfect sense. Me and the other co-founders, we never liked any business models that don't make sense, and you can't really explain how you're going to make money except continuing funding rounds forever. And it's no mystery how Nexo makes its money. We have a funding rate for us, which we have via our complex banking and institutional relations, being in a position to bring down the borrowing costs for ourselves to very low and tolerable levels. And then we take that money and pass it on to the clients for the crypto-backed loans, the instant credit lines, for which we have gotten to be famous, and we make money on the spread of it. It's no mystery how this is happening, and I think we're going to see a shift to that. So when you are talking about exposure to the global economic growth, you have to be very careful what you are actually referring to and whether it's even desirable to be part of that. Now, the other counter argument against Bitcoin and crypto is volatility. And the truth is that volatility is both a blessing and a curse. And it is the reason why we are even here talking about it today. Without volatility, without this enormous price appreciation that we saw in crypto and Bitcoin specifically, we would not even be talking about it. And anything that sees parabolic movements, as Bitcoin going from 3,900 in mid-March to just above 10,000 a short 2 months after that, certainly is going to go undergo corrections, profit taking, selling of the news, as we saw a little bit around the halving, etc. But I don't know if this is visible from the chart, but Goldman say that Bitcoin's volatility is 76%, and when you compare this something to something like Tesla, which is the analyst's darling right now, it has a implied volatility of 116%. So 40% higher. And I think that Goldman, they have a buy recommendation. At least they issue recommendations on what you should do with Tesla. So bottom line, volatility is all about risk management and the proper handling of your financial assets. That's why we have people like Paul Tudor Jones coming on CNBC and Bloomberg and saying that they have low single-digit percentages of the all assets under management in Bitcoin, for the simple reason that having a small fraction of this asset class, which has crushed all other assets this past 10 years, improves the Sharpe ratio of the overall portfolio, meaning your risk-adjusted performance of the entire portfolio as compared to a risk-free assets, which would be something like the treasury bonds that we saw a little bit earlier. So what is happening actually right now, and we can see that very clearly, is a decoupling from crypto, from the financial markets. We have Bitcoin and gold also at levels which are pre-COVID-19, all else is lagging. So the question really is, can you afford not to own Bitcoin? Short answer, no, I don't think anyone who is serious about money management and what is happening, this inflation-induced realities that we're going to see, a function of central banks' QE-ternity, a term that has been coined, 8 trillion being pumped into the system this past 2 months. It is inevitable that we're going to see inflation rates, which are reminiscent, if not on the 1930s, then definitely on the 1970s. So Bitcoin is a hedge. We see it already happening, is for the simple reason that it's finite in nature. It has unforgeable costliness, only akin to what we see with gold. And since we got off the gold standard, gold has appreciated close to 1,800%. The dollar has lost three-quarters of its value. And with the current setup of the macroeconomic picture, we're not very far from that. I see that we're slowly but surely running out of time. So is Bitcoin an asset worth investing? Definitely, because it has inbuilt hard-coded quantitative hardening mechanisms as opposed to quantitative easing. It is a little bit with the traditional markets with falling feels like flying for some time now. We are in this right now, and Bitcoin is quite simply our generation's gold. Gonna end it here on that note. Head over to the booth of Nexo. If you guys want to chat and have some questions, I'll be happy to address those.
Perfect timing. Thank you so much. Fantastic. Right on time as well. Make sure you go check out Nexo. They're a supporter of Mainnets, as is our next presenter. But thank you very much again for joining us, Anthony.